Welcome to the Northbound Wealth Podcast. All opinions expressed by Brent, his co-host, or his guests are solely his own opinions and do not reflect the opinions of Northbound Wealth Management LLC. This podcast is for informational and educational purposes only and is not intended as personalized recommendations or fiduciary advice. It is not intended to provide and should not be relied upon for any investment, accounting, legal, or tax advice, or as a solicitation to offer or to buy any securities. Clients of Northbound Wealth Management LLC may maintain positions in the securities discussed in this podcast.
Hello, everybody. Welcome to the Northbound Wealth Podcast. Your host, Brent Foster. Today is July 27, 2026. Let's dive in. Earnings season arrives. Investors take a breath. Stocks ended last week down as second quarter corporate results, Middle East developments, and chips trade took investors for a choppy ride. The NASDAQ Composite Index was under the most pressure, falling 2.13%. The S&P 500 Index lost 0.61%, while the Dow Jones Industrial Average slipped 0.38% last week. The MSCI EAFE Index, which tracks develops overseas stock markets, rose 0.35%. A volatile week. So the S&P 500 Index shed 0.6%. Amid mixed corporate earnings, continued worries about the U.S.-Iran war. It ended the week at 7,411.98, posting a second consecutive weekly decline. The index is down 1.2% for the month, but up 8.3% for the year. Pakistan is exploring a path towards a resumption of stalled trade talks between U.S. and Iran over the ending the war, following a push initiated by China. Reuters reported, citing sources on Friday. Axios a day earlier said the report that U.S. President Donald Trump was seriously considering a massive attack on Iran, but didn't give a deadline for his decision. Earnings were mixed as Intel reported second quarter beat for adjusted earnings and its strongest revenue growth in 15 years, driven by a 59% surge in the data center and artificial intelligence unit. American Express and Verizon Communications, however, both disappointed with weaker than expected second quarter revenue. The S&P 500 weekly loss came on declines in just 3 of its 11 sectors. Communication services had the largest percentage drop, falling 6.2%, followed by a 6.1% decline in consumer discretionary and a 1.4% slip in consumer staples. Google parent Alphabet weighed down communication services, falling 7.8%. The European Commission fined the companies 890 million euros or 1.04 billion for violating the Digital Markets Act by self-preferencing in Google search and anti-steering practices on Google Play. T-Mobile US was also among one of the hardest hit stocks in communication services, falling 6.4%. The company's second quarter earnings unexpectedly increased year over year, but revenue fell short of market estimates as the wireless network operators post-paid net account additions declined annually. Tesla tumbled 17%, marking the largest weekly percentage loss in both the consumer discretionary sector and the overall S&P 500. The electronic vehicle manufacturer reported a steeper than expected drop in second quarter adjusted earnings per share. On the upside, the energy sector rose 3.8% on the week, boosted by higher energy prices amid the turmoil in the Middle East. Utilities also rose, climbing 2.5%, followed by gains of more than 1% in industrials, real estate, and materials. Healthcare, technology, and financials also eked out gains. Schlumberger was among the energy sector's top gainers, climbing 11%. The company reported second quarter adjusted earnings per share and revenue above analysts' mean estimates. This week, the earnings calendar features many large companies, including Visa, Coca-Cola, Boeing, UPS, Microsoft, Meta, Procter & Gamble, Apple, Amazon, MasterCard, ExxonMobil, AbbVie, and Chevron. Also, I've posted links to the NASDAQ Composite Index and MSCI EAFE Index, so if you want to check that out, that's out on the blog. Economic data will include reports on June wholesale and retail inventories, as well as June consumer spending and the June personal consumption expenditures price index. The U.S. FOMC will also gather for a 2-day meeting that concludes on Wednesday, when members will announce a decision on interest rates. So, how we're doing over the last 12 months. So 1 year trailing number. Thank you, YCharts, for this information. S&P's up 17.9%. MSCI EAFE 18.56. Dow Jones Industrial 16.79. NASDAQ about 20.32%. And the 10-year Treasury note is at 4.69%. That's up about 6.35% from a month ago, 8.82% from 3 months ago, and up about 5.87% from about a year ago. So we've trended higher from 4.43 and 4.31 all the way up to 4.69. Mortgage rates are also pressing into higher levels up in the upper sixes. So the 10-year Treasury does have a slight impact on that. The importance of guidance. Last week was one of the busiest for the second quarter of 2026 corporate reporting season. This week will be very busy as well. Corporate earnings are a key driver of stock prices, so updated corporate guidance can increase market volatility. Last week, two influential companies said they intended to spend more money this year than expected, which caught investors off guard. As more second quarter corporate reports get released, expect investors to pay close attention to any spending updates for other companies. This week, key economic data, durable goods, FOMC meeting day one, advanced economic indicators, retail wholesale inventories, and Case-Shiller home price index, consumer confidence. That's like Monday and Tuesday. Wednesday, another FOMC meeting. We're going to be paying attention to the Fed interest rate decision. Thursday, GDP, second quarter weekly, jobless claims, the PCE price index, and Friday, employment cost index, University of Michigan consumer survey is the final. Thank you, Investors Business Daily, for that information. And companies reporting earnings. Well, let's go through it. Monday, Welltower, Cadence Design System, Nucor. Tuesday, Visa, Coke, KLA, the Boeing Company, Corning, S&P Global, UPS, Waste Management, Sherwin-Williams, Illinois Tool Works, Mondelez, American Tower, Ecolab, Hilton Worldwide Holdings. Wednesday, Microsoft, Meta, Lam Research, Procter & Gamble, Amphenol, Qualcomm, Starbucks, Vertiv, Fortinet, Equinix, General Dynamics, ADP or Automatic Data Processing, Robinhood Markets. Thursday, Apple, Amazon, MasterCard, Bristol Myers, Altria, Stryker, the Southern Company, Quanta Services, Valero Energy, KKR, ICE or Intercontinental Exchange, Cigna, and American Electric Power. So there's a lot going on. It's a very busy week. So wildfire smoke can travel far from the flames, creating poor air quality in communities miles, and miles away. Experts say one of the biggest risks comes from tiny particles in the air, which can contribute to short-term chronic health issues. When smoke levels are high, health officials recommend staying indoors and taking steps to keep indoor air as clean as possible. If you have central air conditioning, use the highest level of filtration for your systems can handle. Filters rated MERV 13 or higher are ideal, and setting the system to recirculate can help limit the outside air coming in. A portable HEPA air filter can also help. If you only have one, consider using it to create a clean room where you can spend most of your time. Experts also recommend sealing gaps where smoky air can enter and avoiding sources of indoor combustion, including candles, fireplaces, and gas stoves. Wildfire smoke can cause symptoms such as shortness of breath, chest tightness, headaches, and burning eyes or nose. Anyone wheezing, struggling to breathe, or in distress should seek emergency care, obviously. But given that this is wildfire season, there's been a lot of them in Canada and the U.S., and smoke is blowing across the U.S. and the Midwest where we're at. Pay attention to that. All right, got a good segment for you. Stay tuned. Wholesale prices moved lower in June, offering a fresh look at inflation pressures before they reach consumers. The Producer Price Index, which measures wholesale costs, fell 0.3% in June. Economists had expected the index to remain unchanged. Energy costs were a major driver. Goods prices declined 1.4%, while energy prices dropped 6.4%. Gasoline prices fell 12%, accounting for about 2/3 of the monthly decrease. Core wholesale prices, which exclude food and energy, rose 0.2% for the month. Wholesale prices matter because they can influence what businesses eventually charge consumers. When producer costs ease, it may reduce some pressure on consumer prices over time. Still, inflation remains above the Federal Reserve's target, which means policymakers are likely to continue closely monitoring upcoming inflation data, energy prices, and consumer spending. And that obviously has an impact on the equity markets if the consumer is feeling pinched. Okay, so I came across new research from the Aspen Institute looks at what it calls essential wealth, a benchmark for financial resilience and major life milestones. The benchmark includes having 6 weeks of take home pay and savings, along with enough net worth to support goals such as home ownership and retirement security. According to the report, about 34.5 million U.S. households fall short of that threshold. The estimated net worth needed varies by age group. So the age range between 18 and 29 is $40,000. 30 to 39, $120,000. 40 to 49 years old, $265,000. 50-year-olds to 64-year-olds, $530,000. 65 plus, $775,000 for a couple with no mortgage. These figures are broad estimates and can vary based on income, location, household needs, and housing costs. The broader takeaway is that income alone does not always show whether a household feels financially secure. Savings, assets, debt, housing, and long-term goals all help shape the bigger picture. If you have questions on where you land or need a financial plan to help you get to a better place, Northbound Wealth's here to help. 317-399-1107. Stay tuned for the next segment. I want to talk about an article that was written in the Wall Street Journal just on June 23rd, 2026. I know it's not quite been a month, but housing affordability is a big deal in our country, and I want to make everybody aware of this legislation and what's going on. And so I figured I'd go through this article. I just don't think there's enough really going on here to make a material change across the country as far as the cost of housing for a lot of Americans who are trying to own a home in this country and participate in its economy. But at least it'll be on your radar as far as following what politicians and lawmakers are trying to do. But they're just not coming together in a substantial way, in my opinion. But let's hear from this article in the Wall Street Journal, written by Rebecca Pisciotto, June 23rd, 2026, and it's covering this housing bill that passed Congress, the 21st Century Road to Housing Act. It's the most ambitious housing legislation since the 1980s to boost affordability, so they claim. This bill passed Congress, but builders fear, which is mostly in the private sector, it'll fizzle. So legislation streamlines some of federal approvals for housing, but it doesn't address local regulations. Easier to build homes and make housing more affordable. The House passed the bill 358 to 32 with broad bipartisan support a day after the Senate voted 85-5 to approve the measure. So a lot of support there, but what's really happening? Home builders and developers are responding mostly with a shrug. The legislation offers no new funding for affordable housing projects, and it is up against economic headwinds that are keeping builders from expanding the housing stock or inventory, such as elevated mortgage rates and higher construction and material costs. So maybe let's do something about that. Ultimately, the bill exposes the limits of the federal government's ability to increase housing supply. Congress doesn't, I will have to say, allowing 30 million illegal immigrants into the country doesn't exactly help either. Congress doesn't have the authority to change the local zoning regulations and building codes that actually determine what gets built in America and that have bogged down new housing development for decades, not to mention, by the way, as an aside, litigation and permitting and all this other stuff. Builders scarred by years of local bottlenecks that have delayed and killed their projects, which is a tough venture when you're trying to put something together. Fear that Congress's new legislation could meet the same fate when cities and towns try to implement it. All of this has to be administered at the state and local levels, said Ed Brady, president and chief executive of the Home Builders Institute. It's going to take some time for this to actually filter down, if at all. Still, the bill known as the 21st Century Road to Housing Act is at least a step in the right direction and sends the correct signals, according to housing economists. It includes measures speeding up federal environmental reviews for certain housing projects, removing restrictions on building manufactured homes, and tying cities' federal funding to their housing production. Aaron Pichota, Executive Vice President of Development at NRP Group, said there are bits and pieces of the legislation that could make a difference, such as easing the limits on what banks can invest in public welfare projects, including affordable housing. He added that eliminating federal environmental reviews would save months on certain projects. This is like ordering an appetizer, Pichota said. It's not going to fill you up. It's not going to be a complete meal. Any housing legislation must contend with the cost of living in the U.S., which has remained stubbornly high since the historic inflation of the pandemic. They're talking about COVID 2020. Housing is among the biggest pain points in voters' budgets, and not to mention, in a lot of people who are trying to make it in America as a financial planner, financial advisor, investment advisor, whatever. In my role, I see that quite a bit. It's trying to get enough money for the down payment and afford the monthly payments on the higher interest rate environment that we're in a low supply housing market. Existing home prices are nearly 5 times the median income, according to Harvard's Joint Center for Housing Studies, well above what it was in the 1990s. Sales of existing homes have been mired in their worst slump in decades. It's true since 2008 and 9 as well. So, in an attempt to respond to those voters' concerns earlier this year, Donald Trump released a flurry of different housing proposals, including a ban on large investors buying homes, which was included in the 21st Century Road to Housing Act. Members of Congress have introduced other housing policy ideas. This bill became the primary vehicle for elected officials to show voters that they are doing something to lighten the heaviest piece of their budgets. Democrats have been talking about affordability for a long time now, and Road to Housing is a way to demonstrate that, said Elizabeth Warren, Democrat of Massachusetts, who led the bill with Republican Senator Tim Scott of South Carolina. The last time Congress took significant action was in the passage of the Low-Income Housing Tax Credit in 1986. That program became the fundamental mechanism that developers use to produce affordable housing. It has since financed roughly 4 million affordable rental units. Trump expanded the program as part of his One Big Beautiful Bill Act. The latest legislative package has no new spending. That made it easier to get bipartisan support in a highly divided Congress. Warren said in many of the regulations that make housing so expensive cost the federal government $0 to reform. For instance, eliminating the requirement that manufactured homes include a metal frame chassis would, by some estimates, save up to $10,000 on each of those units. Some local governments are well ahead of Congress. States, including Montana, California, and New York, are already taking steps to loosen regulations that have historically suppressed housing. Some developers hope that this new federal regulation will send a flashy signal to spur more state and local overhauls. And an earlier version of the bill included a provision that would have forced developers of some new single-family rental homes to sell their properties within 7 years of constructing them. That sparked outrage in the real estate industry and was ultimately removed from the final version of this bill. That was one of the best things I saw from the negotiations, Brady said. Housing economists are preparing to watch how cities and towns react to a mishmash of provisions in this new housing package to see what local officials adopt and what they ignore. It will give researchers a chance to see if we can put this hodgepodge of carrots and sticks together, said Jenna Kenny, an economics and real estate professor at the Villanova School of Business. Will it add up to something is a big question. So, yeah, I'm kind of in that camp. Like, yeah, good effort. Let's see more. Let's get everybody more on board. It seems like the votes are there to do it. So let's figure this out and try to help people gain home ownership in this country. As an aside, not everybody should be owning homes. For example, I look down through some of these comments. It's very interesting. People are pretty heated on it. Affordable housing, says James McDougall in a comment, is a euphemism for subsidized housing. Every government subsidy messes up the market eventually, fixes by another government intervention, rinse, lather, repeat with lots of donations to your favorite politician. There's a lot of that happens. It's obviously politics and frustrating. A lot of people are frustrated by not being able to get into homes. So, what are our legislators really doing about it? Not a whole hell of a lot, it seems. So, I hope that more progress is made on this because we need people to participate, who are American citizens, to participate in the American economy. And one big way of doing that, especially personal finance wise, it's usually one of their largest assets is a home. They build equity, they're not renting, and they feel like, hey, they own a piece of this thing and they're going to raise their families in these homes, and they're going to retire and all and stay and all kinds of stuff. So it's I think it's an important mission, and I think that policies and legislation needs to change to help, but not to be footed by the taxpayer and subsidized. It's a big problem. It's been going on since COVID pandemic. Pricing people out of homes is a problem. So hopefully this make some headway on this and communicate some thoughts to our politicians so that they can make some good decisions and help the industry continue to move forward and supply more homes to people who want to get into them. Stay tuned for the next segment. So I want to give everybody a quick update on SpaceX. There was a good article about SpaceX in Investors Business Daily today by Harrison Miller. As SpaceX stock eyes its fourth straight weekly dive, Musk makes this pledge. So SpaceX stock continued to retreat Monday with shares unraveled roughly 50% from their post-IPO highs. Elon Musk's rocket and space infrastructure company is on track for its fourth straight weekly decline, despite completing a near-perfect Starship test flight. So SpaceX on Friday conducted the 13th test flight for its Starship rocket, which was a major success by most metrics. The Starship upper stage properly deployed its batch of Starlink satellites, and the upgraded heat shield performed as expected. The Starship remained fully intact after its splashdown in the Indian Ocean. The Super Heavy booster rocket did make a hard splashdown in the Gulf of Mexico after multiple engines failed to reignite during the landing burn. The booster vehicle reportedly broke up during the faster-than-planned landing. The Federal Aviation Administration, or FAA, on Monday said no mishap investigation is warranted following the test flight, as the Starship vehicle and Super Heavy booster performance were within the scope of planned FAA authorizations or activities, NASA Space Flight reported. SpaceX lauded the test as a highly successful data collection opportunity for its future missions and rockets. Musk, in a social media post following the test, said SpaceX for the next flight will attempt to catch the Starship with the mechanical chopsticks on its launch tower unless a problem is discovered during the data review. The test flight 13 comes after engine issues and weather delayed two prior flight attempts. The results were near perfection, achieving a number of milestones for the first time, KeyBank analyst Michael Leishock reportedly wrote in a Sunday note, calling the test overall a successful flight and a meaningful success. However, Bernstein noted that there were still concerns about the booster landing. This was not ready for a landing on the launch pad, analyst Douglas Harnd wrote in a client report. SpaceX has landed and flown again the Starship booster. While all other aspects of the booster's operation appeared to be a success, the landing was not. But Harned reportedly wrote that making the Starship fully reusable will be a key step towards SpaceX goals of putting data centers in orbit and ferrying resources for space-based infrastructure. Musk maintains SpaceX Mars goals. Meanwhile, Musk, in an early Monday social media post, reaffirmed his plans for SpaceX to eventually colonize Mars. I will not forget about Mars, Musk wrote, quoting a post showing an image taken of the surface of the red planet. The post comes after SpaceX earlier this year reportedly paused its Mars travel ambitions to prioritize planned lunar missions for NASA. Musk, in SpaceX memo during its XAI merger, said orbital data centers will be key steps for its interplanetary goals. The capabilities were unlocked by making space-based data centers a reality will fund and enable self-growing bases on the moon, an entire civilization on Mars, and ultimately expansion to the universe, Musk had said. So, SpaceX leads race to dodge orbital debris as risk outpaces regulation. So, however, Musk has provided various targets for reaching Mars since laying out his plans in 2016. In a 2016 presentation, Musk estimated Starship could conduct landings in 2022. In 2024, Musk extended the timeline to 2026. Last year, SpaceX, in a Mars program update, estimated it would conduct potential missions during the 2026-2027 launch window or start in 28 and 29, depending on orbital refueling capabilities and other advancements. But Musk in February said SpaceX shifted focus to building a self-growing city on the moon. Musk estimated it could take less than a decade to potentially build a lunar city, while a Mars colony would take more than 20 years to develop. SpaceX will aim to start building a Mars city in 5 to 7 years, Musk wrote. Elsewhere, SpaceX is set to host its first earnings report as a public company on August 4th, so that's just here in a few days. Analysts expect the company to report a loss of 23 cents per share on $6.88 billion in revenue, according to FactSet. So, SpaceX stock trimmed its Monday decline to 1.4%, dropping to a new intraday low of 108.66. SpaceX has unraveled about 50% from its post-IPO high of $225.64 from June 16th. Shares have only registered 3 positive weeks out of 8 since the public debut on June 12th. SpaceX market cap has dropped to $1.53 trillion from its peak around $3 trillion and is approaching the valuation of Tesla at $1.24 trillion. Tesla also lost some ground recently, but that just is some near-term weakness in my view as people reevaluate the valuations of both companies. And over the long run, though, probably great companies to be in. Just my opinion. All right. We'll continue to track SpaceX and Tesla as we move forward. But I thought that was a good, pretty unbiased article without the fluff or the puff, if you will. So I think that these companies, especially with great leaders, are going to do a great job over the long run. I'm not worried about them. So I'm excited. I'm an investor also in both of them. And there's your disclosure. All right. Have a great week and a great weekend. There's more to watch up in the skies and in the stars as we navigate these markets and the economy. We'll be tracking it for you. Thanks for tuning in to the Northbound Wealth Podcast. Thanks for listening, like, and subscribe, and we'll talk to you next week. Thanks.
Whether you're just getting started as an investor or you're managing a multi-million-dollar portfolio, Northbound Wealth Management has the solution for you. It all starts with building the right financial plan. To speak with a financial planner today, visit northboundwealth.com. Don't forget to check us out on youtube.com at Northbound Wealth. And make sure to leave a rating and review on your favorite podcasting app. Thank you for listening.